And welcome back to the Halftime Report. I'm Bob Pisani. Time now for ETF Edge. All week long, we've been talking about the ETFs that mattered most in 2019 and the ones that could break out in 2020 and which ETF had the biggest impact on the decade so far. Let's keep this conversation going. Jay Jacobs with me, head of research and strategy at Global X ETFs. John Davi, founder and chief investment officer of Astoria Portfolio Advisors. And Jay, hard to argue with your pick, technology ETFs, the most important influence in 2010 to 2020.
Yeah, I mean, the performance story was there, of course. It was an incredible bull market in which technology stocks outperformed the S&P 3% annualized. But think about the impact that technology has changed over the last 10 years. We didn't have mobile social media. We didn't have mobile e-commerce. So many new technologies have come out, and that, I think, is really reflected in the excitement around technology.
And your choice was XLK, which is the iShares Technology ETF. John, a little bit of a surprise from you. Minimum volatility, USMV, that was my choice for this year, but why was it most important movement so far in the last 10 years?
Well, if you look at all the ETFs that have gathered the most assets over the last 10 years, it's going to be your VTI, your SPY, your EFA, EEM. So those are low-cost, pure beta, right? ETFs like your standard wealth management solution. So USMV is the largest asset gatherer outside of that core. So I like it. It hedges the downside risk. It actually has higher risk-adjusted returns than the S&P over that 10-year
It was big this year, but you're buying Pepsi and Coke. You're buying a lot of stuff and some utility stuff that's sort of low vol as it is, but you don't capture any upside in the technology. It's sort of you two are like mirror opposites of each other.
We're opposite, but Q4 of last year, when the S&P was down 15%, USMV was down 7%.
Okay, breakout for 2020. The one ETF that's going to really break out, infrastructure, you're arguing, and there's an ETF for that.
Yeah, I think it's going to be PAVE, the U.S. Infrastructure Development Fund.
PAVE.
PAVE. 2020 is an election year. There's going to be so much focus on policy. The only policy that Democrats and Republicans agree on is infrastructure.
John, you're going to pick emerging markets?
Yeah, we like EEM, the broad-based emerging market index from MSCI. So if you think about what's hurt emerging markets, it's been a stronger dollar, Fed doing QT, it's been, Fed hiking rates last year. So a lot of those catalysts have subdued. On the one-year basis, SPY is up 16, EFA is up 12, EEM is only up 7, so I think there's a catch-up trade there.
And, of course, you've got the weak dollar that really plays into this.
Correct.
Thanks very much.